Ni hao to my Japanese brothers and sisters. I have breaking news here for you. By the time you see this video, maybe the meeting's already out. So the Bank of Jelly Beans over there, Japan, Pokemon Island, they are doing an emergency meeting right now. It's because their bonds are basically exploding. So I'm going to read it for you here. So friends, Japan's MOF, Bank of Japan, and the FSA, they are holding an emergency meeting. So at the time of this recording is literally in 20 minutes by the time to start this. The global bond market right now is currently literally exploding, friends. So I just want to quickly show you before I go on to explain stuff so you can actually see it right now. If you want to have a look at anything, you can look at the US futures of their bonds. So this is the ZB. This is the bonds, right? The ZBs. You can see how, when this goes up, the yield's getting smaller because there's demand for the bonds. So like when the stock market goes down, okay, these things are rallying, all right? Then when the stock market usually goes up, these things sell off, right? Because it's like, you know, you're buying in stocks, there's less demand for bonds. But when money printer appears, they both move in sync. What's actually happened is this nasty move, friends. So we've had a huge collapse in this out here. So what you can actually do is you can type in like US 30Y if you want to see their 30-year yield. So it makes the number easier to see. Look at this thing. This thing shot up, my gosh, friends, to like, oh my gosh. You gotta think about this, okay? Right now, the interest rate is 4.5%, all right? This thing has now gone up, friends, it's 30 years. So there is some extreme dingleberry action going on here. The 30-year bond, remember, it's very illiquid, thin compared to the rest of the bonds because 30 years, the duration risk, any little inflation, someone farts, basically things change. But the long-term rate is at it hit 5%. My gosh, just want to show you how enormous that is, especially for these times out here. Man, this is like, man, something's about to crack. You can tell something's about to crack. The good thing is crypto's holding up. Yeah, because we know, bro. Okay, here's the thing, man. So that's why when you look at these yields, it's hard to like really see it like properly. So it's just easier to go look at the futures, so you can see these things going down, and you're like, oh crap. So why it's important is you're like, wait a minute. The stock market's down 20%. They're meant to cut rates. Why aren't the bonds going up? That's what the problem is, friends. Look at the daily. Why aren't these bonds going up? Because if they're cutting rates now, it affects everything deeper in the curve. Why the hell look at this? Whoa, bang. Now, we don't know who's selling. It could be Japan, right? Ni hao. It could be China. Konnichiwa to you over there. It could be both because they're the biggest treasury owners of America. And yeah, man, someone's getting carried out. Japan 30-year bonds are also getting destroyed in price. So I just showed you the US of A ones. Look at these Japan yields. This is Rec City as well. Like Japan's yields, they're 30-year up above 2%. Now, remember, Japan's meant to have like zero inflation. So even having 2%, that's really problematic out here. So before these big collapses and before the Fed interventions, these are the things. This is exactly what you see. So the poopy fiat money, the spreads start widening. So these things start blowing out because there's no demand for stuff. Because remember, friends, it's like when you buy these, you're just buying ownership to toilet paper poop, right, of government fiat. Japan own most of USA's bonds as well, which can explain who's dumping those US treasuries. China also are top 4 owners of US treasuries as well, could be dumping them hard. So what we're seeing is there's no evidence of it yet, but it could be. I think it takes a while, or the accounts you can see. Some people think it's China dumping to retaliate because they have a lot of bonds. They're just messing stuff up. Like, oh, Trump, you want to put the tariff on us? Okay, cool. We're going to dump your bonds. We don't want your shitty fiat. You know, so they'll just dump a chunk of it. And you saw the bonds go down now. That's why that's problematic, right? Because it affects all the borrowing rates, right? So if the bond yield, remember, if they're dumping all the treasuries, the bond yield's going up. The interest rate financing rate's going up. You know? So US bonds are breaking right now. Everything's pretty much breaking. The US Fed, it has to be watching this very closely. This is giving you an example, right? Look at this. This is the S&P 500 at the bottom, and these are the yields. Now, this is crazy, right? So the 10-year note yield. Remember, these things, if the S&P 500 goes down, the yield is meant to go down as well. Because if the S&P 500 goes down, you'd think more rate cuts are coming because it's pricing in like economic times. But actually what's happened is, all right, over time, look at this happen here, bang, this thing's going up. So as the stock market's going down, that's why everyone's like, oh crap, what's actually happening here? Because we're meant to be doing tariffs, but if you're looking at these tariffs, like, hey, there's not even any rate cuts coming. These tariffs, it's basically the market's in chaos. It's saying like, hey, these tariffs, it's a recession and there's inflation. So you can't actually cut rates. It's just bonked. All right. But don't worry, friends. J Power's going to have to come out, print that moolah. They're going to have to, like, who else is going to buy the bonds? China's dumping. Someone's going to have to buy them. I think US Fed's going to do, so this is what Arthur Hayes has said as well. They're going to do some stealth QE thing. They're going to print that money. They got to close that gap somehow. This is the T-bond futures, the US 30s as well. Doing this huge capitulation down. Remember, like when there's like, if you're dumping the bonds, you're like, bro, you're meant to take this for the yield. So this is ZeroHedge as well. But at the bottom, Japan's 40-year yield rises 32 basis points, the highest since 2007. Looks like Bank of Jelly Beans will be first on the bailout watch. There it is. The yen trims gains versus dollar on the news at MOF, BOJ, FSA to meet. So that's why they're checking it. They're like, oh, crap. What do we do? What do we do? We need the Fed to help. They all got to intervene with each other and help each other out. That's why they're probably going to get America on the line. Like, hey, we came to negotiate. You're going to have to help us, baby dolls. So interesting. Now, remember, during these times, friends, remember how I showed you the VIX? Well, there's the bond VIX, right? So just to clarify here for you, remember the VIX, friends, the VIX hit 60. It's the fear index. It's the cost of put insurance, which is betting on downside action. So when this thing man, this thing is like, friends, this is literally once every couple of years, man. This is like a rare event. To hit 60, it's literally auto buy the dip. But a lot of friends, I was watching Josh Brown. Hey, the balance sheet, Johnson & Johnson. I want to own American business. I'm watching those guys. They're not saying buy the dip. I promise. Go watch them. The stock market dudes are scared shitless. They're not saying buy the dip. I'm like, what are you talking about? I want to own American business. I want balance sheets. Johnson & Johnson. I want to own them. Assets, liabilities. That's crazy, man. I'm not joking. They're saying this isn't just a buy the dip. Bro, you've said everything's a buy the dip. Even when I thought it wasn't a buy the dip, they were saying it. Now, no. American business, not buy the dip. I wonder if it's, see what happens, friends, is when you speak to a lot of smart people, they can fudge you out of your bags because they're really smart. Because they basically, they dig right into your brain. Yeah, they use the right words. Infinite minting, Treasuries, Bank of Jelly Beans, Saudi Arabia, bonjour from Italy. You know what I mean? So they're using all the right words to just fudge you out. They go, ah! And then the naive Grandma Peggy is like, oh, cool, VIX is 60, sweet. Trump will figure it out. You know, let's play some Cranky G music. Pikachu in the jungle music, friends. Pretty cool, isn't it? Now remember, I just showed you the VIX, but there's also, friends, there's the bond VIX. Okay, this is the move index. See, bond market option volatility estimate. So if you notice, if you go back in time, friends, whenever this thing has a big spike up, it's a buy the dip because the Fed has to intervene. This is zombie virus 2020. All right, you see that as well. Whenever they have a big spike. Now, what we're looking at right now, this number is very high. So look at these. They had interventions here. This was just high Kippy, right? And then you had the high Kippy as well. This is back in 2022. This up here, friends, remember this spiked up. This was the silver bank. This was the USD CD pegging. Yeah, USD CD peg. This comes down and then actually continues up. Very interesting. You know what's funny? Bill Ackman actually came out here and he was yelling about the bond volatility, and then it literally market went up only, which is funny right in this moment. Now, look what's actually happened again. Here it is right now. Stock market, huge crash, and then this thing is spiking up. You see that? So Fed's got to be close to doing something. Now, I don't know how they're going to do it, but they're going to make up some words. Oh, we're going to use the BTF program with the thing or the this and that, and we're going to combine some jelly beans and some cookie jars and then get a Batman symbol. They print money, move it to this Excel sheet, move it to the other Excel sheet, and then just Bob's your uncle. That's pretty much how it all works. And I've explained it here, right? So this chart shows the relationship between the bond volatility and the S&P 500. Notice how whenever we have a move fee spike upwards, the S&P 500 has been a dip buy, and it's currently on one now. The US Fed must intervene if this move gets out of hand. Bonds must be protected as it's the government's way of selling poop to the world for financing its spending. So, I mean, congratulations to crypto. Has been holding up this whole time. Just checking out the prices out here. I mean, it looks like it's holding up. It looks like it's bro, 31% in Bitcoin, but yeah, it's not so nice if you go and have a look at, bro, like, yeah, is crypto, can we say crypto's holding up? When ETH down 78% in 4 years in a straight line, not a single green candle. Yeah, so maybe that it is what it is. Okay, so no matter what happens with this, something's going to crack. And stock market jitters up and down, the bond market can't crack. Because remember, the bond market, it's their access to future spending. Because the government doesn't sell stocks. They sell bonds. So if they're having a wild time, chaotic explosions like right now, and things are getting squeezed, US Fed's going to have to come in and step in. And guess what? That's why you're in crypto, friends. You're literally in cryptocurrency for this very reason. Because crypto, when there's excess money supply units, we are the bucket that basically drinks that excess liquidity. This is the 100-day offset. We might have something that goes up like this. Maybe. So maybe it's going to be a buy in May, go away thing. We'll see. Also, friends, for some hopium, I want to show you this again. But yeah, I've got some hopium out here. I can just show you there's a bit of a wank off pattern. Believe in something. Thank you to Mr. Arcane Bear. He believes this is a Mr. Arcane Bear, friends. He called the wank off at April 2021, 4 years ago at the top. He called the wank off and it triangle, and then it broke down trying to ban Bitcoin and stuff, right? Now he's calling a wank off again, but for the bullish side. He thinks that we're actually right here and that we'll come back maybe to 80. He thinks we're going to come back to around 89,000, and that'll be a little bull trap. Maybe we get crypto Kobe long in there, and it'll like come back down to like 82 and like scare everyone, maybe like, 20th of April or something for like that in that week. And everyone thinks it's over. And then like towards the end of April into May 1st, we can consume the friendship. We can confirm the friendship. So what do we do right now? I promise you, I've been tweaking my nipples every day. I've been lighting the candles. You're my friend. Bank of Jelly Beans. Let's go. Like, subscribe. Catch you soon.